$2, that's it. Not $200, not $20, just 2 single-dollar bills a day. The kind of money that disappears into a vending machine without you even noticing it left your pocket. Most people often spend more than that on the extra shot in their coffee. If I told you that the same $2 a day could eventually hand you a 6-figure account or a monthly dividend check that's bigger than your car payment, you would probably laugh and keep scrolling. And I get it, that reaction actually makes sense. Because $2 a day sounds like nothing. It sounds like the kind of number that shouldn't matter. But I'm going to demonstrate that it does, and I'm going to prove it with 5 real Fidelity Index funds, real numbers, and one simple daily habit that anybody watching this video, including Bobby, can actually stick to. By the time we get through all 5 funds, you're going to see how one account will quietly cross $500,000, and how another account, built from the exact same $2 a day, will be paying out over $4,000 a year in dividends without you lifting another finger. If financial freedom is one of your goals, this is the video you do not want to miss. And hey, if this is your first time visiting our channel, please subscribe and turn on your notifications so you don't miss our subsequent videos. Your support means a lot to us. Thank you. Welcome to Investments Mindset, where wealth builders come to get inspired. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Let's dive in. Firstly, let's make sure we're on the same page. An exchange-traded fund, or ETF, is simply a collection of companies bundled into one investment. Instead of putting all your money into a single stock and hoping it succeeds, your investment is spread across hundreds or even thousands of companies. That diversification helps reduce risk. If one company struggles, the others help balance things out. And as the overall market grows over time, your investment has the opportunity to grow with it. That's why index funds have become one of the most popular and reliable ways to build long-term wealth. Every Fidelity fund we'll look at today is built on this simple idea. Now let's talk about the real force behind long-term investing: compounding. This is what can turn just $2 a day into a surprisingly large portfolio over time. Here's how it works. Every dollar you invest earns a return. Instead of taking those earnings out, they stay invested and begin earning returns of their own. Year after year, your money keeps building on itself, quietly growing in the background while you go about your daily life. Think of it like a snowball rolling downhill. It starts small, but as it keeps rolling, it gathers more snow and grows faster. That's exactly how compounding works. The longer your money stays invested, the more powerful the growth becomes. That's why time is your greatest advantage, not the size of your investment or the app you use. A dollar invested today has decades to grow, making it far more valuable than a dollar invested years from now. Let's start with fund number 1, the Fidelity Small Cap Index Fund, ticker symbol FSSNX. Think of this fund as the up-and-coming underdog of the group, the one nobody's watching yet, but everyone will be talking about eventually. Instead of loading up on the household names you already know, this unique ETF tracks the Russell 2000, which means it owns close to 2,000 smaller, scrappier American companies. The fund launched back in 2011, and it runs on an expense ratio of just 0.03%, which is about as close to free as investing gets. The dividend yield sits around 1%, modest by design, because small companies tend to reinvest their profits in growth rather than mailing checks to shareholders. This is the fund built for patient investors who want exposure to tomorrow's winners today. Here's what $2 a day actually turns into inside this fund. After 10 years, Bobby's account would be sitting at roughly $11,600.34. Push that out to 20 years, and it would climb to $41,811. By year 30, the account could yield approximately $120,081, built from a total of $21,900 in contributions of that final balance. About $77,605 comes from pure share price growth, while roughly $20,576 comes from dividends, quietly reinvesting themselves along the way. By year 30, that account would be kicking off close to $1,200 a year in dividend income, right around $100 a month, generated entirely from spare change. I know this is already getting your attention, but trust me, this is nothing compared to what's coming next, the special ETF that's always misjudged based on its name. For instance, I can probably guess that if you say the word sustainability out loud, most people will assume this fund is stacked with solar panel companies that are sacrificing returns to feel good about where the money goes. That assumption is wrong on both counts. FITLX tracks the MSCI United States ESG Leaders Index, and the way that index is built matters. It doesn't blacklist entire industries. Instead, it goes sector by sector and picks out the companies leading in responsible business practices. That's why you'll find Microsoft, Nvidia, and Alphabet sitting comfortably at the top of this fund, right alongside strong names from healthcare, financials, and consumer goods. The fund holds 268 companies total, with the top 10 holdings making up 57% of total assets, and it charges a lean expense ratio of just 0.11%. Over the past 5 years, it has averaged a 15.2% annual return, frequently outrunning the S&P 500 in the process. The dividend yield comes in around 1.1%, but the number that really separates this fund from the pack is its dividend growth rate, clocking in at 15.42% per year, the fastest growing payout of any fund in this lineup. Now watch what $2 a day does inside that engine. After 10 years, the account would sit around $14,967. By year 20, it would have crossed $76,579. And by year 30, the balance could land at approximately $330,204, built on total contributions of just $21,900. By this time, this account is projected to be paying out approximately $3,632 a year in dividends, or roughly $303 a month, arriving every single month like clockwork. Before we continue, if you find value in this video, even just a little, please subscribe and hit the like button to help us continue to provide more insightful and educational videos. Your support is highly appreciated. Thank you. Coming up at number 3 is an exceptional fund that comprises giants outside the United States. This fund is none other than the Fidelity International Index Fund, ticker symbol FSGX. Everything we've covered so far has been on United States soil. This one leaves the country entirely. FSGX owns over 2,000 companies spread across every major market outside the US, covering Europe, Japan, the UK, and emerging markets across Asia and Latin America, all packaged into one fund with a rock-bottom expense ratio of just 0.06%. When Bobby puts money into FSGX, he isn't betting on any single country. He's betting on the rest of the planet. And here's why that matters specifically for income. International companies have a longer tradition of returning profits directly to shareholders rather than hoarding them for growth, and that culture shows up clearly in the numbers. FSGX offers a dividend yield of 2.45%, more than double that of the rest of this lineup, paired with a dividend growth rate of 15.15% per year. That combination of a high starting yield and fast growth is where this fund earns its reputation as the income powerhouse of the group. Now let's check out what could happen if Bobby invests the same $2 a day in FSGX. By year 10, the portfolio balance could reach about $12,916. By year 20, it would have grown to roughly $53,646. By year 30, the account would have yielded approximately $182,078, with about $91,993 of that coming from share price growth and an impressive $68,185 coming purely from reinvested dividends. nearly matching the growth portion dollar for dollar. But the number that really steals the show is the income. By year 30, this account is projected to pay out roughly $4,460 a year in dividends, which works out to about $372 a month, the single highest monthly dividend check of any fund in this entire lineup, built from a smaller total balance than several of the others. The next fund is the reason why it is difficult for anyone to have any excuse for not investing. Let's check it out. Coming at number 4 is the Fidelity Nasdaq Composite Index ETF, ticker symbol ONEQ. This exceptional fund tracks the Nasdaq Composite, giving investors exposure to well over 2,000 companies listed on the Nasdaq exchange, heavily weighted toward the technology names that have defined the last 2 decades of market growth. The expense ratio runs at 0.21%, and the dividend yield is a slim 0.55%, because these are growth companies plowing profits back into research and expansion rather than paying dividends. Nobody buys this fund for income. They buy it for one thing: raw, aggressive, long-term growth, and the numbers back that up in a big way. By the 10-year mark, $2 a day inside ONEQ would grow to approximately $17,086, already ahead of every fund we've covered so far. By the 20-year mark, the account would have crossed $105,758, and by year 30, well, brace yourself, because those simple $2 a day investments would have yielded approximately $565,934. Think about that for a second. A portfolio of over $500,000 from just $2 per day. That number is enough to ignite any level of motivation required to take investing seriously. Now let's check out the next fund. Coming up at number 5 is the Fidelity Nasdaq Composite Index Fund, ticker symbol FNCMX. Here's what makes this comparison so fascinating. FNCMX tracks the exact same Nasdaq Composite Index as ONEQ, the fund we just covered, but it is structured as a traditional mutual fund rather than an ETF, and it carries a slightly higher expense ratio of 0.3% compared to ONEQ. But by the time you see the projections, you would probably give it a chance. Let's dive into the numbers. After the 10-year mark, $2 a day inside FNCMX would grow to approximately $16,994. By year 20, the portfolio balance would reach about $104,368. By the 30-year mark, the account would have yielded approximately $553,595, with roughly $477,000 coming from share price growth and about $54,700 from reinvested dividends. Again, let that sink in for a moment. A portfolio worth more than $500,000, all from investing just $2 a day. The goal of this video is simple: to show you what a small, consistent investment can become over the next 10, 20, and 30 years. I also want to address a common belief I hear from many people in our community, that investing is only for the wealthy. The truth is, building wealth isn't about starting with a fortune. It's about starting, staying consistent, and giving your money time to grow. Even a couple of dollars a day can put you on a path that may completely change your financial future. If this video helps you see investing in a new light or provides even one valuable takeaway, I would really appreciate hearing from you. Let me know your thoughts in the comments below. Now, if you're serious about building real wealth, then consider this channel your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. Listen, if you want to know the 5 best Fidelity Index funds to buy and hold for life, or the 5 best high-yield ETFs for monthly dividends with zero NAV erosion, check out the videos on your screen right now. Thank you, my friend.